Hello, everybody. So, HIMS stock is down on major news. The major news being that HIMS and Eucalyptus closed the acquisition. And I'm calling this video the second half sandbag because they told us they would do this in the second half. As far as I'm concerned, the second half starts in July. It doesn't start in early June the 2nd. So they are way early. They could be as much as 6 months early, as little as 1 month early. They are way early. And of course, the stock is down because, nobody cares about the execution. The market doesn't reward execution. It hasn't done that in 4 to 5 years. It only rewards hype. That's why you have so many stocks getting out of hand right now, going crazy on hype and others being sold off. Unfortunately, a lot of my stocks have been sold off, including HIMS. It's still worth mentioning, though, that HIMS is about a double compared to the sell-off, of course, from February. You may remember that whole debacle, that whole catastrophe. And it took, a good 2 months for the market to figure out that HIMS had actually partnered with Novo and actually was selling Lilly's products, and that the lawsuit was dropped. It wasn't immediate. This stock seems to be trading with a major lag between the good news and actual stock price movement. Anyways, done with the frustration. Let's just focus on the business. Let's just talk about the business. They are releasing this statement saying the acquisition is closed. They have closed the definitive agreement. One of the first consequences of that is that this acquisition reinforces their confidence in achieving the long-term target of 6.5 billion. HIMS is a sandbag king. This guidance is a joke. I think they're going to do much more than that. I think that guidance will be updated. Perhaps in Q2 we will get updated guidance now that we have acquired Eucalyptus. Now, they also tell us they have the ability to reach hundreds of millions of people now across 4 continents. Yes, Eucalyptus added a bunch of countries, including Germany, Canada, Australia, and Japan, among a few other countries. And of course, they already had some presence in some of these countries, like the UK, for example, with the Zava acquisition. But this is going to double down their presence. They are now going to have access to potentially data of 850,000 people that they have served on the platform, on the Eucalyptus platform to date. How many of these people are not customers anymore? I don't know, but I mean, in my view, this will clearly get us above 3 million subscribers on HIMS. Perhaps 3.2, 3.3 million. Of course, this number is cumulative. Some of them dropped, but I think this gets us above 3 million recurring monthly users, paying $50 to $100 a month for whatever drug they need with HIMS, and with the follow-up, the care follow-up, the prescription capability, the pharmacy capability of HIMS fulfilling this demand. I think it's truly outstanding. Talking about in the letter here, talking about their proprietary closed-loop data. And that data, of course, is going to be ever more important. HIMS is going to have 3 million people reporting the drugs they're taking, the outcomes, the over the long run too, right? Over the long run. So they'll be able to, over the long run, see how medications work or don't work. HIMS noting in this letter that the doctor office is not the future of health. I mean, to me, this is so obvious. It's just like saying the doctor, the bank branch, the local branch is the future of banking, or the local mall is the future of retail. The future of retail is the mall in your community. No, it's obvious to me that the doctor office is not the future of healthcare. The pharmacy, the local pharmacy, neither. The future of healthcare, in my view, is of course the IMS app. And copycats, there's enough room for competition, the Row app, the LifeMD app, there's not all sorts, but there's quite a few apps direct to consumer that could take a major share of the market, right? I mean, you have Netflix and you have YouTube, so It's entirely possible to see Row as a leading competitor to HIMSS in the future. Maybe LifeMD will pick up a lot of that business, but to me, they're going to stay number one. To me, HIMSS is going to stay number one of this telehealth business, of this pharmacy plus doctor all together without insurance and with AI and with transparent pricing. I think this is a big deal that they already acquired a company, that they moved so fast. It is a big deal. Now, the question comes about the new guidance for 2026. So let's be conservative and let's assume that the full year 2026 guidance they gave us is right in the middle. So I'm going to assume 2.9 billion. Being conservative here, and let's also assume that the ARR at Eucalyptus didn't grow for the past 6 months, which is a wrong assumption. It probably did grow, but let's assume it didn't grow. And we know, of course, that the guidance that was given to us last quarter for a full year 2026, that did not include Eucalyptus. Eucalyptus was not included. So now we got to add Eucalyptus to it. So we have 2.9 billion. That's the midpoint for 2026. And I'm adding 450 million ARR divided by 7/12, right? Because we have 7 months now of revenue that we're going to count for the year 2026. So that's 261 million. So that's higher than what I was expecting. I used to say we're going to see 220 million. No, we're going to see higher than that. That means that the midpoint for sales in 2026 for HIMSS could be 3.161 billion, again being conservative here. And if it is 3.161 billion, last year, all 4 quarters of last year, we had 2.34 billion. So we'd be moving from 2.34 billion to 3.16 billion, which gets us exactly to a growth rate of 35% for HIMSS for the year 2026. That's in a moment where, of course, 5 months ago, people were yelling, oh, the growth is going to be flat. Oh, the growth is not going to increase. Oh, GLP-1's not real. Oh, we're going to lose all of this business. The stock has been the victim of so much FUD, and that's what happened when a stock has new ideas like HIMSS and disrupts so much like HIMSS, going after traditional insurance and going after traditional doctors both at the same time. I will conclude, of course, HIMSS is down on this news of closing early. HIMSS is down about 1%. And that's because, of course, execution has not been well paid by Wall Street in these crazy markets. I was going to make the joke, but I'm not going to go there. But briefly, should we rename the company HIMSS.ai? Should we have like an AI announcement, like press release about AI? Maybe the stock would wake up to that. And of course, HIMSS is obviously an AI stock, given all of the data that we're getting on these customers. I've updated the valuation at 35%. I think 35% is about fair here because, I only counted 7 months. I only counted 7 months of revenue. But really, if we're looking at next 12 months, really, we should be counting the full Q1 2027 in there, which I didn't. So I think that number is roughly right at 35%. And with 35% revenue growth in my spreadsheet, HIMSS is showing an enterprise value over gross profit over revenue growth of a 0.1. It is dirt cheap. The rule of 40 is a 49. And of course, the stock is down because it is the nature of the market right now. That's just the way it is. So this was not financial advice. This is not investment advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.